Welcome to After the Bell, the capitalists versus consumers daily market report. Here is everything that moved the market today, Monday, May 4th, 2026. And today was a rough one. The Iran situation escalated significantly over the weekend, and the market felt every bit of it. This video is for educational purposes only and not financial advice. Please hit the like button and subscribe so you never miss a daily report. Let's get into it. The numbers at the close. Today was a clear risk-off session. The Dow Jones Industrial Average dropped 557 points, or 1.13%, closing at 48,941. That pulled the Dow back below 49,000 and well below the 50,000 threshold it has been approaching. The S&P 500 fell 0.41%, closing at 7,200, giving back some of last week's record highs. The Nasdaq Composite held up better, dropping just 0.19% to close at 25,067. The Russell 2000 Small Cap Index fell 0.76%. The culprit was one story, and one story only: Iran. The Iran escalation. What happened this weekend? Over the weekend, the situation in the Middle East escalated significantly, and the market opened Monday morning already in defensive mode. The United Arab Emirates announced that it had intercepted a number of missiles fired from Iran, the first time the UAE's missile defense system was activated since the conflict began. Oil tankers belonging to the Abu Dhabi National Oil Company were targeted. The Fujairah Petroleum Export Complex, one of the most important oil shipping terminals in the world, was struck. President Trump over the weekend announced what he called Project Freedom, a plan for the U.S. Navy to begin escorting trapped ships through the Strait of Hormuz. Iran immediately warned it would take action against any U.S. ships attempting to enter the strait, and that it would treat U.S. military intervention as an act of war. Conflicting reports circulated throughout the day about whether an Iranian attack had actually hit a U.S. patrol boat. The Pentagon denied the reports. Iran's state media claimed otherwise. The uncertainty alone was enough to rattle markets. The result? Oil surged. West Texas Intermediate crude spiked above $107 per barrel intraday before pulling back slightly to close around $105. That is $5 higher than Friday's close and well above the psychologically important $100 threshold. Higher oil means higher inflation. Higher inflation means the Fed stays cautious. A cautious Fed means higher rates for longer. And higher rates for longer puts pressure on stocks, particularly the rate-sensitive sectors that were already struggling. What higher oil means for everyday Americans. Let's connect this to your wallet directly, because this matters beyond just stock prices. Mortgage rates jumped today. The average 30-year fixed mortgage rate rose back above 6.5%, its highest level in over a month, as the 10-year Treasury yield climbed nearly 8 basis points to 4.45%. Every time oil spikes and inflation fears rise, Treasury yields move higher and mortgage rates follow. If you were planning to buy a home or refinance a mortgage, the Iran situation is directly affecting your borrowing costs right now. Every week the conflict continues without resolution, adds pressure to mortgage rates. Gas prices were already at the highest level since 2022. With oil back above $105, expect to see pump prices rise further in the coming days. Winners today. Despite the broad selling, there were several strong stories today. Circle Internet Group, the company behind the USDC stablecoin, surged 17% on reports that lawmakers in Washington made significant progress toward clearer stablecoin and cryptocurrency legislation. Coinbase also gained on the same news. This is a meaningful development for the crypto space. Regulatory clarity has been one of the biggest overhangs on cryptocurrency adoption, and any progress toward a framework is a positive catalyst. Seagate Technology continued its strong run from last week, surging further after its blowout earnings report. Micron and SanDisk also rose. The memory chip space continues to be one of the strongest pockets of the market. Palantir Technologies climbed ahead of its earnings report, which was releasing after the close today. the big data analytics company, has been one of the strongest performers in the AI space, and investors were optimistic heading into the results. eBay surged nearly 10% after GameStop submitted a proposal to acquire the e-commerce platform for $125 per share, a roughly $56 billion deal. Whether this deal actually happens is uncertain, but the bid price represented a significant premium to where eBay was trading, and the stock responded accordingly. Losers. Today, the Dow was the hardest hit major index today, and the losses were broad. Only 7 of the 30 Dow components finished in positive territory. Home Depot was the worst performer in the Dow, falling nearly 3%. Higher mortgage rates hurt Home Depot directly because fewer home sales and refinancings mean fewer home improvement projects. FedEx and UPS both slipped on news that Amazon plans to significantly expand its own shipping and distribution network, a direct competitive threat to both companies. Energy stocks fell despite the oil spike, which seems counterintuitive. ExxonMobil and Chevron both beat earnings last week, but their shares declined today as investors took profits and the broader market sold off. When markets go risk-off, even beneficiaries of higher oil prices can get caught in the selling. Defense stocks had a mixed day. Some names rallied on the escalation news, while others gave back recent gains. The Berkshire Hathaway transition. Over the weekend, something historic happened in the investing world that deserves mention. Warren Buffett's successor, Greg Abel, ran the Berkshire Hathaway annual shareholders meeting in Omaha for the first time. The reviews from longtime shareholders were broadly positive. Abel demonstrated a steady hand and a firm grasp of Berkshire's sprawling operations. Buffett was present but stepped back from his usual central role. The big story from the meeting: Berkshire is sitting on nearly $400 billion in cash. That cash reserve now represents more than 50% of Berkshire's entire portfolio. Some analysts believe the company got too cautious too soon. Others see it as preparation for a major acquisition or a signal that Abel sees better buying opportunities ahead. When Berkshire moves that cash, and it will eventually, it will be one of the biggest market events of the year. Watch what Abel does with that war chest. SpaceX IPO. Update: a story developing in the background that every investor should be aware of. SpaceX is targeting an IPO later this year at a valuation of up to $1.75 trillion. To put that in context, that would make SpaceX one of the most valuable companies in the world at listing. Altimeter Capital CEO Brad Gerstner said on CNBC today that buying SpaceX at that valuation is not a get-rich-quick scheme. The upside from the IPO price will be more measured than what early investors have experienced. But the SpaceX IPO will be one of the most closely watched market events of 2026. We will cover it in detail here at Capitalists versus Consumers as more details emerge. What to watch tomorrow? Advanced Micro Devices reports earnings tomorrow after the close. AMD has surged dramatically over the past year on AI infrastructure demand, and tomorrow's results will either confirm that momentum or introduce doubt. Watch for revenue guidance and any commentary on AI chip demand, particularly whether the OpenAI revenue miss from last week is having any impact on customer spending. Palantir's earnings are dropping tonight as we record this. The company has been one of the standout AI plays of the past year, and any weakness in guidance would be notable given the broader questions about AI monetization raised last week. The Iran situation continues to be the dominant driver of daily volatility. Watch oil prices. Every dollar higher puts more pressure on inflation, rates, and consumer spending. Every dollar lower relieves that pressure. And watch for any developments on Project Freedom, Trump's plan to escort ships through the Strait of Hormuz. If the U.S. Navy begins those escort operations, the market will be watching closely for any Iranian response. The bottom line for everyday investors today was a reminder that geopolitical risk is real and that it affects everyday financial life, not just stock prices. Oil above $105 means higher gas prices, higher inflation, higher mortgage rates, and a Federal Reserve that cannot cut rates. That affects everyone regardless of whether they own a single share of stock. The good news is that the market held up relatively well considering the severity of the news. The Nasdaq barely moved. The S&P 500 gave back less than 0.5% from Friday's record close. The market is not panicking, it is processing. For long-term investors, the message has not changed. Stay diversified. Stay consistent. Do not make reactive decisions based on one day's geopolitical headlines. These situations resolve, and when they do, the market typically responds strongly to the upside. That is your After the Bell report for Monday, May 4th, 2026, here at Capitalists vs. Consumers. Please hit the like button. It helps more people find this content. Subscribe and turn on notifications so you never miss a daily report. And remember, every Friday after the close, we do our full weekly breakdown right here at Capitalists vs. Consumers. We will see you at the closing bell tomorrow. Recommended reading for investors: The Psychology of Money by Morgan Housel, The Little Book of Common Sense Investing by John Bogle, A Random Walk Down Wall Street by Burton Malkiel. This video contains affiliate links. I may earn a small commission at no extra cost to you.